Another crypto obituary. It's probably been over 400 times now that Bitcoin specifically, and tied to that, the crypto market has been declared dead. I want to get through what that article is, but I'm going to save that for the end. I want to show a couple of comparisons here of what other asset classes or what other things were considered dead and forgotten, and then went on to become what we know of them as of today. So let's just jump right into this. Okay, so here's the article. This is from Chetan Bhagat, who's I believe he's a Times of India reporter. He's an author and someone of note. Let's put it that way. And he put this out about 4 days ago, saying crypto is now dead. FTX, a cryptocurrency exchange, collapsed last week, proving a lot of cool guys horribly wrong. And we're going to dissect this, but this is the basis of this entire video, is what else was proclaimed dead and how those turned out. And we're going to come to this right at the end, okay? So first things first here, as I saw this was pretty interesting. The death of equities. So the death of the stock market. So how inflation is destroying the stock market. All right, this was put out in 1979. So August 12th, I believe that is, August 12th, 1979. So think about this. The stock market. Things that people point to today as saying this is the way a real asset should behave or asset class should behave. Crypto is nothing but a fad. Was one point looked at as that's dead. And that was 1979. Right? That was the year that I was born, was 1979. And so obviously I'm not aware of this, and I believe many people who are on YouTube or use YouTube as a resource aren't familiar with that. So when we hear things like crypto is dead, it's such a profound statement that you think, oh my God, this has only been used for crypto and never for any other asset class. Well, equities market, one of the biggest markets out there and one of the prime places that people park their investment money and planning for their retirement, was once considered dead, right? So it's on its way of dying. And I even have a quote here, so I want to kind of highlight this, is that this is a quote from Bloomberg, who bought Business Week. So that was a Business Week headliner. And it goes on to say that we're still getting grief for a cover story that appeared in Business Week, the ancestor of Bloomberg Business Week, 4 decades ago on August 13th, not 12th, 13th, 1979. The headline on the cover was "The Death of Equities, How Inflation is Destroying the Stock Market." 3 years after that article appeared, the stock market hit bottom and then began a remarkable resurgence. The total return on the S&P 500 since its 1982 low, with dividends reinvested, has been nearly 7,000%. Not bad for a corpse. So even when you look at that in perspective, that article, the headliner, seemed right, because it continued to dive down and it didn't reach its bottom until 3 years later, and then things turned around and they are where they are today. But they were pretty confident in writing that. That was a headline on that cover. How did that turn out? Not so great. What's the next one we can point to? Well, you guys might have heard of this. It's called the internet. Well, here's an article here from the Daily Mail, and this was December 5th on 2000. 2000s. So I don't know how you guys are, but with me, when I think of anything in the 2000s, it's somewhat new, fresh, technology heavy, and savvy. Just what comes to mind. I don't think of 2000s as some historic time, but that was 21 years ago. And here we go. Internet may be just a passing fad as millions give up on it. That's the internet. Now, there are a whole bunch of articles, there are a whole bunch of videos of people declaring the internet as a fad. How did that turn out? Okay, so I showed how crypto was viewed now. Crypto is now dead. That's been an ongoing statement, reoccurring statement since 2009, 2010 really. Over 400 times that's been declared. But I've just showed you that the equities market was also declared dead or dying. We've got the internet, which is a fad. It's not going to last. There's a corpse. That's not going to work out. And look how that's turned out. So let's go back to this particular article. Crypto is dead. And there's so many things to unpack in here. I'm not going to go over all of them It's just something that you guys can look up and find this article, and if I can find the Twitter link, I'll put that in the description as well. But just some of the things I wanted to highlight here. Okay, so this guy's like, the warnings were there, and I'm looking at the bottom left here. The warnings were there. We'll just enlarge this a little bit. All right, the warnings were there. One of the world's greatest investors, Warren Buffett, had said he wouldn't buy all the Bitcoin in the world for $25. Okay, this is the same guy who also didn't want to invest in Apple. Didn't think Amazon had any inherent value. This is the same guy who said, I'm not going to invest in airplanes or airlines, and he did that a couple times. He also sold them at their all-time lows during everything that happened in 2020. So yeah, okay, just because he is the greatest investor, and I'm not going to even deny that or debate that, doesn't mean that he's inherently right about technology that he's not familiar with. You're looking at a guy who's in his 90s to assess future technology. I'm sorry, that's not going to be his domain. It's not going to happen, right? And then he goes on to say, he being Warren Buffett noted that ultimately he would have to sell it to someone else to get rid of it, as it had no other use. Okay? All right. You can make a case for that at this point in time because it's early. But if you look at the stock market, there's no real inherent value of that piece of paper. I mean, unless someone buys it off of me, unless there's a market for me to sell it on, it means nothing. There's no loss, there's no gain. It's just a piece of paper. It doesn't mean anything. The companies that he buys, sure. But, I mean, the stock itself, the paper, the certificate, has no value. So that to me doesn't make any sense anyway. There's a couple other quotes there, but here's also what he's highlighted here, right in this portion here, is crypto became like communism. My God, these guys are really hitting some notes here to get people's attention. Which promises power to the people through decentralization, but ultimately leads to power in the hands of a select few. All right, so let's address that first. You cannot use entities as a direct comparison on things like decentralized finance. You've got these centralized entities who are using DeFi. Like they're doing things in a DeFi manner to get some yield or to do something, but ultimately the entities themselves are controlled by a select few, which he mentioned, a select few. But the idea of crypto, what was happening and other parts of the crypto space outside of the exchanges is legitimate. And you can't look to these entities that have failed and say that the whole industry is going to fail. The whole market's going to fail. If that was the case, I would look at Enron and the equities market and a whole bunch of hedge funds and other entities that collapsed over the last several decades and say that the equity market, there's nothing to it. We know that the equities market, the power is in the hands of the few, right? The rich, the wealthy, those who control the corporations, the boards, the banks, how they analyze certain stock, and they can say something is a good buy or a sell time, really dictate what the market does. So if you want to talk about ultimate control by a select few, it's in the equities market. So that's there as well. Okay, so let's not confuse what happened with an exchange, which everyone who is all for decentralization would tell you not to park your assets on a central exchange in the first place, right? For that very reason, that they are just like traditional markets. So while there may be some decentralized financial activity going on in the background, everything is wrapped around a traditional model where the select few in that entity control everybody's assets. So nobody in the crypto space actually believes that a centralized exchange is good for you. Nobody does. All right? And here, before I even go on with that, I want to make it clear here. Crypto is now dead. Crypto and Bitcoin are not necessarily the same thing. Okay? They run different. There is no entity that owns Bitcoin. There's no entity that that pushes Bitcoin out for gains for themselves. This is code. It just gets pumped out, gets mined, and that's it. No one's like it's not FTX, not an exchange. It's not a project that's creating a token to use as collateral for a loan. Like none of that's happening. Bitcoin's strength is actually in its decentralization. There's no trust required. It's peer-to-peer. It's borderless. It's censorless. All of that. So mixing the two, right away you know that this guy does not know what he's talking about. Bitcoin and crypto are not the same thing. They're not. Okay? But he goes on then to say, plus, whenever something is regulation government free, it also attracts the shadiest characters and most unethical behaviors. And this is exactly what happened. And I actually responded to this. This was from a tweet he had. And what I said was, thankfully, the equities market, the stock market, is not this. It's not regulation government free, which means that our money is 100% safe from shady characters. No SPACs. Shouldn't be any Enrons. There's no scams in there. Nothing, right? I mean, our money's super safe in the equities market. Nobody ever goes belly up. Nobody ever loses all their savings in the equities market because it is regulated and there is government activity involved. Policies, protocols, all that. So we're safe, right? No, absolutely not. So, and even beyond that, let's not act like those of us in the crypto space don't want some regulation. We do. But the people in the powers that be are the ones that are muddying the water. They can't grasp or wrap their head around this new space, and so they can't formulate policies to make things clear, but they still let things run, and then they sporadically come down and crack down on things that there's no clarity there. So having regulation is not a bad thing, but it's how you implement that regulation and how much, like, do you understand what you're regulating? So he's, again, muddying the water there, all right? But he goes on to say, look, remember these truths. And this is him pointing to why you shouldn't even be in crypto, okay? There's no quick money. It's different this time. There's no old-fashioned thinking when it comes to money. Young and cool doesn't make it a good investment. Okay, so there's no quick money. There's no, it's different this time. Of course. That's exactly what we say in this space. That's why we preach, hold on to your Bitcoin, your ETH, things that you think have long-term potential, because there is no quick money, right? When we say it's different this time, there's cycles to Bitcoin. There's 4-year cycles. So everyone who's preached this time is different, they were the OGs who were saying it's not. It's the same learning curve. And what's different is you're just getting a lot of investors who are new in the space because they didn't have the capital necessary to make any significant gains in the equities market. Crypto and Bitcoin, we're going to make the two separate, they're the only places where you can go, where you can make an asymmetric bet. Meaning you put a small amount, but the potential return could be massive. So you put in $500, there's a chance things can come back at $20,000 or $50,000, right? That's the only place you could do that. You put in $500 in the stock market. Yeah, what are you going to do? Wait 40, 50 years until there's some sort of return? And what return would that be? When, 20% is considered God status, right? In a year of return. What are you going to get? So this comparison and saying everyone who's coming into crypto is looking for a quick buck, that is true to some extent, but long term, those people don't last. Same way that if you had the same mentality in the stock market and you wanted a quick buck, you wouldn't last. Okay, so they're not. It's not as if crypto is this thing that's so different than everything else, and that's why I wanted to show you that even what he preaches about the equity market, like things that have regulation, you're safe, your money's safe. Absolutely not, right? People get scammed in the real estate market. They get scammed in the equities market. Anything that has government regulation, a lot of times is those people in position of power that are actually scamming you or responsible or benefiting from the things that are happening. So let's not act like because there's no regulation in crypto and Bitcoin markets that's why all these shady characters are and things are happening. No, it happens all the time in regulated industries. So I hope you guys found this valuable. It is something I want to stress because like I said, 1979, there are things that have happened many times before we were born or when we were really young that we don't remember or we didn't know. And so it's good to look back and kind of see how things play out. So while he says this time is not different, I 100% agree. This time is not different. When you look at the equities market and you look at the internet, crypto is no different.